Let's welcome Clyde Russell, Asia Commodities and Energy columnist at Thomson Reuters. I very much enjoy reading Clyde's columns every week. Always find them quite precise and perceptive. And today we have one of them on the digest, which is his most recent one. What OPEC does with output matters more than what it says. Clyde, your thoughts on your headline and ultimately the thesis of your column and the decision OPEC made last week?
Well, I was expecting them to sit on their hands. I think there were just too many uncertainties for them to take a view one way or the other. And I think that, the market is still in that sort of place where there are uncertainties. Initial indications are this new coronavirus variant is not a serious thing. But there are others. It could, there are still governments taking action to cut down on travel and things like that. So we're not exactly certain how this is all going to play out. You then have the uncertainty of the SPR release. What does that actually mean? And so there's a number of things that are still sort of up in the air. So OPEC probably did the right thing in just a steady as she goes kind of outcome. But for me, what is important is the market focuses a hell of a lot on what people say and not so much on what they actually do. So OPEC was supposed to raise output by 400,000 barrels a day every month from August to December, putting 2 million barrels a day back into the market. So far, they've put 1 million barrels back in. Okay, we've still got December to go. That's an August to November figure. So at the moment, we're short 600,000 barrels of what they said they were going to do. Now, I would ask, does anybody really believe that they're going to put in 400,000 more in December and 400,000 more on top of that in January? And then they'd still be 600,000 short. They'd have
I suppose there's a will and there's a can. The will they or can they? Where do you sit between those two?
I think if the structure of this agreement is actually quite unusual, in that the individual members of OPEC Plus are not allowed to eat each other's lunch. So the ones that could actually increase output and make up the difference, we're mainly talking here the Saudis, perhaps something from the UAE, Kuwait, even Russia. But they can't do that because they're not allowed to, in terms of their agreement, take market share or the allocations from the other producers who can't increase. And you might be looking there at more at Nigeria, Angola, some of the other ones. So I think they probably could, if they were determined enough, do it, but it would mean breaking the terms of their agreement. So I don't think they will. I don't see that extra number of barrels coming into the market. The question I also ask for, if you were trying to still construct a bullish narrative for crude oil, you'd have to believe that demand is going to surprise to the upside, or at least continue to grow. And you'd have to believe that supply is going to surprise to the downside. And I think that's still possible. I mean, Omicron could turn out to be a damp squib, and you could end up with supply issues, as we've seen OPEC Plus struggling to actually reach their targets. So, it's too early to say, well, we've had a peak for the year. However, I think, the chances are you're going to see more oil come into the market, even if it's not that 400,000 barrels, per month. And that should create some kind of downward pressure on prices. But there's still quite a lot of uncertainty.
Your thoughts on the fact OPEC did this little sort of fidgety thing that they never closed the meeting. This OPEC meeting of last week was never adjourned. I don't know if they're all still sitting in some virtual parallel Zoom room for 24/7. But your thoughts on that as a decision, and is it relevant?
It's probably not relevant, but it was a really good little bit of what I would call spin. Just keep a little bit of uncertainty out there, keep it in the back of this market's mind that, yes, we can change our mind very quickly if we want to. Does that mean they actually will? No, but it's an interesting little decision. I think it just adds a little bit more to the uncertainty rather than clarifying anything. I think it was quite an interesting thing to do. But one thing I've been, I would like to comment a bit on the OSPs. I actually think it was quite a brave decision. Yes, I understand how the Saudis basically set them. They look at the market structure and, the time spreads and things like that. And on that basis, it was probably justified. But we have seen in the past that when the Saudis want to do something with their volumes or prices, they're quite happy to, make counterintuitive, if you want to call them, decisions with the OSPs. So raising the price for Asia is an interesting thing to do, because Asian demand has been weak basically the whole year. It's certainly lagged Europe and it's certainly lagged the US. Now, I'm not going to sit and criticize people in the investment banks, but I will note that when they write about the oil market, their narrative is really a US-Europe-centric narrative, and very few of them ever actually talk about Asia. But Asia is the biggest importing region, and it takes about, 2/3 of Saudi oil. So I think it's much more important that, we have a look at what's going on in Asia. And, we have seen an increase, an uptick in imports in November, and we will probably see another uptick in December, maybe. But that's really on the back of the Chinese allowing their independent refiners to stock up with crude before the end of the year. They gave them fresh quotas. Does this actually mean that there's a strong demand return in Asia, and that we're starting to see Asia recover in line with what was happening in Europe and the US? I'm not convinced of that yet. I really am not. And that's what I think it's a really brave decision by the Saudis to increase the price of oil for, early next year, because, you've got refining margins falling in Asia. You've got the Brent Dubai exchange for swaps falling as well, which in theory will make oil's priced against Brent cheaper than the Middle Eastern grades. So you might actually start to see more clearance of cargoes from West Africa. You probably are going to see more demand of US cargoes flowing into Asia as well. And I'm not, far be it from me to argue with Saudi Aramco, but this does seem a decision that, if anything, will encourage their refiners in this part of the world in Asia to switch to their competitors.
Clyde, I think one of the big questions we've had on this program for a while has been, what is the health of China at this moment? It seems a lot of the data points are pointing towards an uncertain outlook for China. Welcome your thoughts on that vis-a-vis, obviously, where it intersects with energy demand, oil demand.
Well, I think China's a kind of mixed case at the moment. I think they've got very strong demand for certain types of energy, namely natural gas and coal, but not so much for oil. You've got to remember that China's still got quite a lot of regional lockdowns in place. They are still following a COVID-0 strategy. They're still effectively locked off to the rest of the world. And I think that is, keeping a lid on their oil demand growth. And we've seen that. I mean, they're actually going to be down this year on imports rather than up. And I actually don't remember when last that happened. You'd have to probably go back 20 odd years before that you get something like that. So it's quite an interesting dynamic that's going on in China. I think, if I look at Asia, I'm not really seeing too much of a demand growth story. If you believe that $80 was a good price for oil prior to our little, dump last week, I'm not sure I do. I'm not sure I think that $80 was the right level to be at in the first place. I look at, the investment bank thesis, but the price drop means the market's factoring in the loss of 7 million barrels. Well, no, that actually is only true if you believe that $80, $85 was the correct price in the first place. If you believe that $70, $75 is the correct price in the first place, then, we've just, popped a little bubble and gone back to where we are. It certainly seems to me that the major importing nations do not want prices above 80. And OPEC's probably got a line in the sand of about 70. So I think that you're going to see a tug of war to get, the price somewhere between those two levels.
Yeah, we had started this week with the Indian senior energy advisor in India sort of banging the table that's above 70 won't be tolerated, and being all confident that he had his team now with the US and China and everybody on board with sort of holding that line. But just quickly, Clyde, on that point of China's demand outlook from the point of view of Asia as a whole, OPEC Plus has looked to the major consumers in Asia, as you said, for the first time in 20 years, maybe you're seeing a decline in imports into China, whereas OPEC Plus over that 20 years and certainly the last 10 has looked to China for that incremental demand growth. Should OPEC Plus be paying attention here that this is a trend change, or is this a one-off moment?
I think you're going to see a slowing down in Chinese growth. I think they're reaching the point where they're going to stop building new refineries. And the other point is, crude import demand in China is just one side of their equation. A lot of what they're now doing is importing oil and exporting products. And that's going to be a trend that continues. If you actually look, their product exports are up quite high. They're still growing. So I think you're going to see that sort of dynamic that if they are putting more product into the market, that should, in theory, a barrel of product exported from China is a barrel of product not needed from some other refinery somewhere in the world because it's now being bought from a Chinese refinery. So it's not a zero-sum game. But I think in trend terms, I would still expect China's crude imports to increase because they're building out more refineries. It all depends how they want to run their energy system. If they want to utilize their refining capacity and export more product, or if they want to start shutting down some of the older, less efficient refineries. And that's sort of a policy decision. But at the moment, I think we're on track to still increase imports. What I do see coming to an end is the need to import for their SPR. And that's been in the past few years about 1 million barrels per day has been flowing into the SPRs. So I mean, they don't disclose that. That's really a calculation based on the total amount of crude they have available from imports and domestic output versus what they're processing, and you just subtract the two and you work out that over the last few years they've been sending up to 1 million barrels. Last year it was 1.2 million barrels a day went into the SPR. That sort of thing is coming to an end.